tremendously into consideration right now. How have you seen things and changed and pivoted your business recently or this year?
Yeah, and let's go right to the core of what you said because I want everyone to capture what you said. It's crucial. I really do believe what Paul said is spot on. I believe the number one skill set of an entrepreneur, the difference between a good and a great one, the great ones have the ability to pivot and make switches. Period. The end. It's the number one skill set. There's so many people doing the same things over and over. There's a book, I think it was called like Who Moved My Cheese, if I remember right. And the whole yeah, it's actually a really good book. So Who Moved My Cheese? Essentially, it just says every day the mouse comes out and the cheese was there every day. And then someone moves the cheese and there's mice that continue to just come out and say, well, it was here. It was here all the time. And so I'm just going to keep on because maybe it'll come back. And then there's mice that said, nope, I got to go follow the cheese because if it doesn't come back, we're going to starve. And it's this ability to pivot. So many times we're waiting for that cheese to come back versus moving and just following the cheese. That's the ability to pivot. And you do need to have data and you do need to be checking it a little more frequent than you did 2015, 16, 17, 18. Things shifted quick. To have this ability, it means you've got to be really making sure you have some kind of software system that allows you to easily push buttons that then creates the dashboard, the KPIs, the things that mean the most. We call them our vitals. We want to make sure that we're seeing that. Ours happens to be the LOAC, LOACC. And Paul, I'd be glad to actually share our version of it. This is our proprietary stuff. No one even knows what LOAC is. It is our proprietary vitals. I'd be glad to share it with you and your team. It's actually, if you go to thejoetracker.com, this will give you beautiful spreadsheet on what we're tracking. Now, this is built into our software, into our CRM, Paul, but we made it so that they can do it because these really are the vitals. If you go to a hospital and you broke your arm, you're going to show them, hey, my arm's broke. They're like, yep, it's broke. I can see it. They're not just going to go take you back and go fix your arm.
Right.
They're going to do blood pressure. They're going to measure you. They're going to get your height, your weight. They're going to do all these other vitals, even though they can see that's where your problem is.
Yeah.
Same thing with your business. You can't just look at how many deals I'm doing, right? The broken arm. You've got to look at all the key vitals. So LOAC, L is your leads. It's crucial that we know that we have plenty of leads coming in. The next one is O, which is opportunities. How many of those leads? So we count everything, even the one that calls us up and says like kick sand, F off, whatever they're going to say to you, that's a lead. Someone that responded negative or positive, that's a lead. Opportunities, those are the ones that are then have an opportunity to turn into something that they haven't said no. They're thinking about selling. It doesn't mean they have to sell right now, but those are an opportunity. From opportunity, LOA, A is appointments. How many from those opportunities are converting into an appointment? And then C is our contracts. How many of those appointments convert into contracts? And then from contracts to closings, because we know something that has jumped up over the last couple of years has been this close rate, where cancellation has kind of jumped up. And for some people, it's higher than it really, really should be. We look at these vitals all the time: leads, opportunities, appointments, contracts, closes. We know in 30 seconds, if I'm on an island and someone brings me this paper that says, here's your LOAC, I know within 30 seconds if I'm healthy or if I'm unhealthy in my business. And in that same 30 seconds, I can pinpoint to a T where the problem is and call my COO and have them fix it. So that's what they would get if they go to thejoetracker.com. They'll get that. There's videos that'll walk them through and explain them how to start tracking it. Do this, guys, for the next 90 days. It'll change your life. Like that's the metrics you need to be looking at. This ability to pivot though, was it 21 when the rates went up?
Yes, 22.
Was it 22? Okay.
Yeah.
It's like these years are going way too quick. So 22 in the fall of 22. Prior to that, in like first quarter, let's say February, we have a guy that sits on our board at Joe Home Buyer that's an economist. And everyone's like, why would you have an economist sit on your board? Because he sees things that we don't see. And he literally told us, he says Q3, Q4, guaranteed without fail, rates are going to go up and they're going to go up in the 8s. And we're looking at him like, you're nuts. It's at 2.95. What are we talking about right now? And he's like, they're going to blow past 4. They're going to blow past 6. They're going to 8. And I'm like, how do you know this? And he broke it down. Here's this. Here's what you're following. Here's what you're measuring. Based off of that, I can see these going to 8%. So fellas, what are you doing right now to prepare for your disposition process? Because in 2008, from what I understand about your guys' business, is a lot of buyers lost their shorts. They paid X and then the home was worth Y, and they lost a ton of money. So this time they're going to be smart based off of last year or 2008 experience, and they're probably going to just freeze. You got fight, flight, and freeze, right?
Yep.
They froze, and we all felt it.
Yep.
So third quarter, fourth quarter, when the rates did exactly what this economist said, well, what happened, the rest of Q1 and all of Q2, we were already making a pivot. We were already teaching our disposition managers that it's no longer going to be a simple text message and a simple email to get people to go out and inspect the property. We need to act like salespeople and sell happiness. So we were already ahead of the game, making calls to every one of our cash buyers saying, hey, go on out there. And they're like, man, we haven't heard from you forever. It's usually just a text, just an email. What we were doing was just prepping for what was inevitably about to come, says our economist. Come third quarter, rates did boom. Well, we already had a process in place. Everyone else, their business flatlined. A lot of people went out of business because a lot of their contracts canceled. They couldn't move it anymore. All the buyers were freezing. Well, for us, they didn't freeze because we called them up and said, hey, Jim, dude, did you see that home on 123 Main Street? They're like, yeah, but I don't know what's going on with these rates. Jim, let me tell you this. You know our process. It's always been highest and best. Rarely were you able to win a deal because there were so many people wanting it. Guess what? It's not the case anymore.
Right.
Dude, this is like your home run. This is like right up your alley. This is the homes you like. You really should go take a look at this. And it could be that you're the only one on this deal. Go take a look at it. And we'd still get 20 people to go out on these inspections because we would pick up the phone and we already had a dialed in process. We still follow that today because a simple email and a simple text still isn't working like it did during 16, 17, 18, 19, 20, the greatest bull run we've all experienced and been part of. So because of those shifts and pivots, our business actually exploded and took off instead of flatlined or dropped or got out of the game.
Nice. What you did effectively there was a lot of people go, oh, I'm just going to get outbid by everybody there, where you're letting them know in advance. It's probably not going to be the case. You're going to have an opportunity here. And that's how you get more people out there. And then people are like, no, I'm excited. I might be able to get this below what I thought I was going to get at. And it's still a deal for them at that point, right?
Yeah.
It gives them that little built-in margin that they need because nobody wants to catch a falling knife, as you said. I mean, that's where things could go bad. That economist did a great job with that because not many people saw that. And that was the highest, quickest interest rate increase in the history of this country. We never had that before. That
Crazy.
was staggering. Yeah. And that was when they started the war. The Ukraine war had started then. Ukraine-Russia war.
And part of that sales pitch, Paul, is marry the home, date the rate. Rates always change.
They do.
And so it's even right now, if you're having a struggle moving properties, anyone listening to this, you got to help your buyers understand you don't want, well, not necessarily, you don't want rates coming just down. Right. Because if rates go down, I promise you prices will go up. Guaranteed. It is guaranteed.
Yeah.
So it's like pick your poison.
Mm-hmm.
Yes, it's a higher rate right now, but the price is at its best price right now. Because if rates, and they're already starting to have all these talks right now, Fed cutting and doing this, and there's all this pressure on getting this guy to jump out, and whatever the politics system does, great, go do it. But at the end of the day, when those rates drop, I can promise you, you'll look back at this podcast and Cody and Paul said, home prices are going to go up. So pick your poison. Buy now while prices are here and rates are up here. Marry the home and date the rate because the rate is going to change. And when you do, that home is also going to shoot up.
100%. And from a real estate investor's perspective, you actually want the market where you don't have as much competition because that's where you're getting the better deals. And I'm starting to see them right now happening, Cody, in the bank REOs, not on the auction side as much. Those banks have not come to the realization yet that the market is softening and it's different. HUD Home Store. So we're in different markets all over the country with HUD. And for example, one in Florida that was listed at $300,000, they just took our offer of $179,000. It's pretty good now that we have not seen anywhere near cuts like that in the past, right? But it's just it's a lot of opportunity that we're seeing there. We're seeing them in Alabama, Texas. We're getting some of these same cuts in these different markets. So people need to be aware that there's great opportunity like that coming and there's less competition. So you're going to get better deals because I made more money in 2009 to 2013 when there was like no investors out there no competition, and I'm bidding 40, 50% of the list price, and I'm getting these properties, and I'm wholesaling them to other investors who are fixing to flip them, and I'm fixing and flipping, and I'm keeping some as rentals. So great
Yeah,
opportunity could be coming. So as Cody said,
I
if the
agree with you.
rates go down, like you're going to have more competition, you're going to have to pay more for these houses, and you don't necessarily want that.
I agree. And I think another thing that needs to be said is there is so much regulation happening,
Yeah.
and you can have a victim mindset around it and say, oh man, I hate this or I hate that. When really what it's doing is its job. Now, you still have to make sure that they're also putting the right governance and the right system in place, which in some states it's not. It's actually going to ruin their market. But um, what I will say is if you can always just train your brain to be positive, that's something that has naturally happened for me in my life, Paul. I don't know why, but I'm always smiling. I mean, how many times have you met me and you'll never see with a frown on my face. Like
You're
I
always
just don't.
no, it's a
Always a happy individual.
mm-hmm.
Yeah. And you have to look at this regulation in the same sense. It's going to cut out a ton of the riffraff. The people, all the bad apples in this game, they need to be cut off. And at the end of the day, this regulation will be the thing that cuts off many because there's multiple states now that you have to be a licensed agent. The riffraff is not going to go get the agent license.
Yep.
Great. You just killed off a fraction of your competition. So it really is a good thing. Again, we don't know what all the laws and regulations are going to be. It is an area that needs to be regulated. So I agree with it. But at the end of the day, look at it as a positive thing. It could turn into that 2015, 2016 again, where it's a little bit more blue ocean feel versus just competition all over the place. I think it's going to clean up a lot of stuff, and I think it's a great thing for those that have a positive mindset around it.
Oh, completely agree. I completely agree. There'd be great opportunities for people out there as long as they're open to it and know how to take advantage of everything there as things change and staying ahead of the numbers, know what markets to be into and having a perspective of where people are moving to and where they're leaving from. So you got to look at like all these different forecasting models too, right? You can follow U-Haul and follow where people are leaving from and where they're moving to. And I think that's one of the most important things people can look at too, those things.
Yeah.
And, you know, we
Great.
had part of what's going on in Florida as well is we had a call to return to work. So a lot of people have moved to Florida and now they are living in these other states. We're living in, say, Pennsylvania or Ohio. Now they have to move back because they've got to report to work 3-4 days a week. So
Yeah.
a lot of that's going on in Florida too, probably other states as well, because a lot of people probably moved to Arizona too, which is a nice retirement state as well. So you're probably seeing Phoenix face a little bit in their market too, of a little bit of an exodus from that perspective. Because look, the
That's
job market's
interesting.
not great. The job market's not great right now, so people are like, I got to keep my job, right?
That is a very well,